They told you money was just paper, then it became numbers on a screen. And now it's turning into something you can't even touch, see, or hold. Yet people are staking their life savings on it. In the shadows of our financial system, a silent revolution is unfolding, one that promises freedom to some and ruin to others. But here's the truth. Almost no one dares to confront. In the year 2025, the debate over cryptocurrency in the Muslim world is not just about profit, it's about faith, ethics, and the soul of our economy. Every coin traded, every token mined carries a question far deeper than how much is it worth. It asks, is this pure or is it poison? Tonight, we peel back the glittering surface of digital wealth to expose the mechanics, the risks, and the moral crossroads we now face. By the end of this journey, you will not only understand the reality behind the words halal and haram in crypto, you will see a vision of the future that could either liberate the financial world or chain it to a system more dangerous than anything we've seen before. And the choice will rest in our hands. In Islamic economics, money is not merely a tool for trade, but a trust that carries ethical and moral responsibilities. The Shariah framework defines permissible currency through several criteria, including intrinsic value, stability, and freedom from prohibitive elements like excessive uncertainty, qarar, and gambling, mesa. Historically, gold and silver served as ideal examples because they had tangible value, could be stored without decay, and were widely accepted in trade. This foundation ensured that wealth was tied to something real, promoting fairness and preventing exploitation. When examining cryptocurrencies under this lens, the first question becomes whether a digital asset created through code and consensus can meet these traditional requirements. Supporters argue that decentralized blockchain technology removes the control of money from centralized powers and returns it to the people, which aligns with Islamic values of justice and fairness. However, critics point out that the absence of intrinsic physical backing and extreme volatility challenges the stability requirement, potentially turning crypto into a speculative gamble rather than a medium of exchange. Additionally, the speculative trading culture around cryptocurrencies raises concerns about Mesa, as many investors are drawn not by utility but by the hope of quick, massive gain. The Sharia perspective requires careful differentiation between a currency structure, its intended purpose, and how it is used in practice. What may be permissible in design could still become impermissible if its usage promotes harm, injustice, or exploitation, making the evaluation of cryptocurrencies a nuanced and evolving discussion among scholars. Intrinsic value has always been a core principle in determining the legitimacy of a currency in Islamic economics. Historically, gold, silver, and other commodities were valued not only because they served as mediums of exchange, but because they had uses beyond trade, ensuring that their worth was not dependent solely on collective belief. Cryptocurrencies, however, exist entirely in the digital realm with no tangible form or physical backing. Supporters of crypto argue that intrinsic value in the modern age can also come from utility, such as the ability to send funds across borders instantly, secure transactions without intermediaries, and create programmable financial systems through smart contracts. Projects like Ethereum and blockchain-based payment solutions offer services and functions that extend beyond mere trading, potentially giving them a form of value in the eyes of Shariah scholars. On the other hand, many cryptocurrencies, especially meme coins and tokens without any clear use case, derive their value almost entirely from speculation and hype. Such assets are highly volatile, often manipulated, and can lose their entire worth overnight, which raises concerns of Garan and Maisiyah. In Islam, value must be tied to genuine benefit and economic productivity rather than mere pursuit of quick profit. The difference between a utility-driven crypto and a purely speculative one becomes critical, as the former might be argued to hold permissible value, while the latter would fall into prohibited territory. This distinction continues to be a point of intense debate among scholars evaluating crypto in 2025. Between 2020 and 2025, scholarly opinions on cryptocurrencies have undergone significant shifts as both the technology and its global adoption have matured. In the early years, many Islamic scholars leaned toward prohibition, citing the absence of intrinsic value, extreme volatility, and the rampant speculative trading that resemble gambling. Concerns over money laundering, fraud, and market manipulation further reinforced its caution. However, as blockchain applications expanded beyond currency into supply chain tracking, decentralized finance, and asset tokenization, some scholars began to revisit their positions. They recognized that not all cryptocurrencies operate the same way, and that certain projects could be designed to comply with Shariah principles, especially when backed by real assets or tied to productive economic activity. By 2025, the scholarly landscape has become more nuanced. Institutions like AAOIFI and various national Sharia boards have issued research papers and fatwas distinguishing between permissible and impermissible crypto use cases. Some scholars now permit specific cryptocurrencies as mediums of exchange or for investment if they meet the criteria of avoiding Garan, Ritzia, and Riba. Others remain unconvinced, arguing that the speculative culture surrounding most crypto assets makes them inherently risky and non-compliant. The divide is not merely academic, it reflects actual disincentives between preserving Islamic economic ethics and adapting to an evolving financial world. This ongoing discourse demonstrates that the permissibility of crypto is not static, but will likely continue to evolve as technology, regulation, and usage patterns change over time. From an Islamic perspective, the way a financial instrument is used can significantly influence its permissibility, and cryptocurrencies are no exception. When crypto is employed purely as a medium of exchange, facilitating trade, remittances, or cross-border payments without involving interest, excessive uncertainty, or unlawful goods, it may align more closely with Sharia principles. In such cases, the focus is on utility and a genuine facilitation of commerce, much like historical trade using gold or silver. However, when cryptocurrencies are primarily held or traded as speculative investment assets, the ethical evaluation becomes more complex. Extreme price volatility exposes investors to high risks, and the rapid pump and dump cycles common in crypto markets can resemble gambling, mesa, which is prohibited in Islam. Additionally, manipulative practices by large holders or market influences create an environment where wealth can be unfairly transferred from uninformed participants to those exploiting the system, violating the Islamic principle of justice in trade. Another consideration is the intention behind holding crypto, whether it is to preserve value, engage in productive investment, or merely chase short-term profit. The distinction between halal and haram use often lies in these intentions and practices. For example, using a stable, asset-backed cryptocurrency for day-to-day transactions may be seen differently from speculating in volatile tokens with no clear use case. This makes it crucial for Muslims to assess not just the nature of the cryptocurrency itself, but also the manner and purpose of their engagement with it, ensuring it remains within ethical and Sharia-compliant boundaries. Regulation plays a decisive role in determining whether cryptocurrencies can operate within Sharia-compliant boundaries. In many countries, early crypto markets were unregulated, creating a breeding ground for fraud, market manipulation, and illicit transactions. Such an environment naturally conflicted with Islamic principles, of transparency, trust, and protection of wealth. Over time, however, governments and financial authorities began introducing clearer frameworks requiring identity verification, KYC, anti-money laundering measures, AML, and guidelines for consumer protection. By 2025, some jurisdictions have developed specific regulatory models for Islamic finance in the crypto sector, ensuring that digital assets are backed by tangible value, tied to lawful economic activities, and free from interest-based mechanisms. These regulations also address the issue of excessive speculation by implementing trading limits, stablecoin backing requirements, and transparency in token issuance. In certain Muslim-majority countries, Shariah advisory boards now collaborate with regulators to review crypto projects before they are approved for public use. This process helps distinguish between permissible cryptocurrencies designed for utility and impermissible tokens driven by gambling-like speculation. However, in regions where regulation remains weak or inconsistent, the same risk that concerned scholars in the early years still persists, making it harder to ensure compliance. Effective regulation, therefore, becomes a protective shield, not only safeguarding investors from harm, but also creating an environment where cryptocurrencies can genuinely serve as ethical financial tools. Without such governance, even promising crypto projects risk being overshadowed by unethical practices and market instability, undermining their acceptance in the Islamic financial framework. The future of cryptocurrencies in the Muslim world will depend heavily on the development of Sharia-compliant blockchain ecosystems that address both ethical and practical concerns. As technology evolves, there is growing interest in creating digital currencies backed by tangible assets such as gold, real estate, or commodities, ensuring stability and intrinsic value. Such asset-backed tokens could provide the benefits of blockchain efficiency while aligning with Islamic finance principles that require transactions to be tied to real economic activity. Additionally, smart contracts, self-executing agreements coded onto the blockchain offer opportunities for automating halal transactions, profit-sharing agreements, and zakat collection with full transparency. Islamic financial institutions are beginning to explore partnerships with blockchain developers to launch products that can compete with conventional banking while adhering to Sharia guidelines. In the long run, a shift toward utility-driven crypto projects could help move the market away from pure speculation toward productive, ethical finance. Education will also play a critical role, as many misconceptions about crypto's permissibility stem from a lack of understanding about how it works and how it can be structured to meet Islamic criteria. If these efforts succeed, the Muslim world could potentially lead a new wave of ethical fintech innovation, offering alternatives not just for Muslims, but for anyone seeking fairness, transparency, and shared prosperity in finance. The path forward is not without challenges, but with thoughtful regulation, asset backing, and ethical design, cryptocurrencies could become a legitimate and transformative part of the Islamic financial landscape. In conclusion, the question of whether cryptocurrency is halal or haram is not a matter of blanket approval or outright prohibition. It is a nuanced issue shaped by intention, design, and ethical use. As we've seen, Islamic finance does not reject innovation, but it demands that new tools serve justice, transparency, and real economic value. The challenge lies in separating the noise of speculation from the genuine potential of blockchain technology to create fairness and opportunity by combining informed scholarship, strong regulation, and Sharia-compliant innovation. The Muslim world can harness this technology for good, ensuring it uplifts rather than exploits. The choices we make today will define whether crypto becomes a tool of empowerment or a vehicle for harm. Thank you for giving your time and attention to this discussion. May you always be guided towards knowledge that benefits you, decisions that protect your wealth, and actions that earn you lasting reward. Good luck, and may your journey in both faith and finance be one of clarity, integrity, and success.